attack on digital economy. After being attacked through turnover tax, the youth who have tried to find themselves jobs by using their creative talents in the digital space are being targeted through digital content monetization. From paying zero tax currently, a creative youth who creates a digital platform or content will now be required to pay 15% tax. As a country, we will be killing innovation and leaving our youth with too few options, if any. We will not support this proposal. 5. Tax Appeals Tribunal. A proposal is being made that in the event of a business or an individual who has a dispute with the Kenya Revenue Authority over tax owed, that individual or company will be required to deposit 20% of the disputed amount with the KRA before the matter can be heard by the Tax Appeals Tribunal. This is another aspect of illegal borrowing by the regime. It is open to abuse by rogue KRA officers. It will affect cash flow of companies. We oppose it. 6. Taxation of reimbursements, that is per diem. Out of the blues, Kenya Kwanza wants to tax money paid to officers on duty at 30%. How then do those officers meet their expenses? Since when did reimbursements get to be treated as income? We find this requirement extremely punitive. We oppose it. We've known that this per diem was being paid by people to be spent to defray expenses wherever they are traveling. And those costs, the cost of living in those countries has already been worked out by the government. If you are taxing it, you are therefore subjecting these officers to suffering wherever they travel. 7. Taxing trade associations. After taxing traders, Kenya Kwanza want to follow them and tax their associations. Associations whose duty is to fight for the welfare of members will now be deemed to be carrying out business and be taxed on gross receipts, which will be deemed as income. This is a double jeopardy that will affect the welfare of businesses in the country. We oppose it. 8. Enhanced VAT payments. Buried in this bill are proposals to remove from zero rating to tax-exempt pharmaceutical products, agricultural pest products, and even fertilizers. Maize flour, cassava flour, and a number of other types of flours are being moved from zero rating. Transportation of sugarcane to factories will now attract VAT. The VAT measures proposed by the bill effectively raise the cost of medicines, healthcare, and food, including that of locally produced sugar. It goes against Kenya Kwanza's often stated pledge to subsidize production. We object. 9. Enhanced excise duty on imported cement. Kenya Kwanza wants to raise duty on imported cement. It will be a signal for local producers to raise their prices. This will impact the local construction industry, which is currently the main driver for job creation in Kenya.